Time now for an in-depth look at the market news on this Monday. And for that, I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
Well, OPEC and its allies have finally agreed to cut oil production by almost 10 million barrels a day with some special provisions made for Mexico, which at first was not on board. Is this going to be enough to get prices back up?
Probably not. The market doesn't seem to think so. The oil price futures did go up by about 5%, but it's still very low compared to where it was before the coronavirus. And fundamentally, the problem is that demand is very low. The economy of the largest oil consumer, China, is very sluggish. The largest oil-consuming industry, which are the airlines, are paralyzed. And the demand is not likely to pick up until COVID-19 is under control. And because the OPEC and the other oil producers are still pumping, we actually have, in some countries, shortage of places to put the oil. So it's not going to work itself out for a while. But the bigger problem may be that it's not entirely clear whether United States firms will join in the supply cut, because some U.S. firms want to drive down prices to choke shale oil producers within their own country, drive them out of business, or buy them out cheaply. And even though President Trump is brokering this supply cut, the coordinated price cuts, the collusion may be illegal under U.S. antitrust laws. And it's also ironic because President Trump actually during his presidential campaign argued that the oil prices should go lower. But anyhow, because fundamentally the price fixing and collusion is not good for consumers, so there's also a pushback from that side. But until the demand picks up, oil prices will not pick up as well.
Well, Wall Street markets, stock markets were closed for Good Friday. European markets closed for Easter Monday. Futures, though, pointing to a strong open possibly on Monday for the FTSE and some others. What's the story in the global markets?
Okay, well, Asian markets actually fell a bit today, depending on the country, in the 0% range to about 2% range. But for the last 2 weeks or so, the markets have been relatively calm. There has been slow and steady growth. The United States market during the last week rose from 10 to 13%. China rose 1.18%, and even Japanese stock markets rose. And that's, I think, mostly because the central bank and the governments have done everything they can to absorb much of the risk that's coming out from the coronavirus. The lesser demand, the supply shocks, they've all added a lot of risk to the various companies which have been responsible for the large drops in stock prices. But because the government is now providing funds, providing liquidity, and absorbing all the risks from the coronavirus as much as the governments can, things are, I think, back to nervously normal. They know that if they get into big trouble, the government will do everything it can to help them out. So that is reducing a lot of risk, and that is returning the stock market to somewhat normality. But if there's further shocks, if the COVID virus gets suddenly worse, we'll see a lot of volatility again.
Well, Professor Young, numbers-wise, what are we going to see coming out in the week ahead?
Okay, well, the most important number is for Korea, March unemployment report. The February unemployment report as well as the inflation reports for February and March haven't really, it seems like Korea hasn't really been hit by the coronavirus all that much compared to historical unemployment rates that we've seen in the United States and Europe. So that's somewhat lucky for Korea, but still, we're sort of expecting bad news. We'll have to see how big a bad news is. It might be that Korea will go, it'll still mean a lot of hardship, but Korea will go out relatively well. And then on Friday, the Ministry of Economy and Finance will release their Green Book report, how the economy is doing so far in April. That's probably going to give us what the closest to a real-time report on how the economy is doing. And then foreign-wise, Tuesday we have China's trade account figures to see whether China is beginning to recover. And on Wednesday and Thursday, we'll have U.S. retail sales and weekly U.S. unemployment filing. We'll have to see whether United States economy is leveling off or it's getting worse.
All right, Professor Young, we'll have to ask you about those numbers when they are out. Thank you, as always, for coming on.
Thank you.